All right, so you want the lowdown on Axcelis Technologies stock, ticker symbol ACLS.
And you're trying to figure out if it's worth adding to your portfolio. Well, we've come to the right place. We've got company summaries, analyst reports, even some insights from earnings calls, all ready to be broken down.
We're going to sift through all that data
Yeah,
and give you the information you need to know.
exactly. So first things first, Axcelis Technologies. They're a major player in the semiconductor equipment world.
Yeah, more specifically, they design, manufacture, and service the ion implantation equipment that's used to make the chips that power pretty much all our electronics.
And their reach is pretty impressive. They work directly with manufacturers in the US, Europe, and Asia. Global operation for sure.
Okay, so let's get into the numbers. As of today, November 19th, 2024, ACLS is trading at $72.14, down a bit over 1% from yesterday.
Right, but keep in mind, one day's worth of fluctuation doesn't tell the whole story. We need to look at the bigger picture. They have a market cap of $2.34 billion. Revenue for the past 12 months has been $1.08 billion, and a net income of $222.09 million.
Okay, and their forward EPS is projected at $5.86, and their PE ratio sits at 17.25, which is definitely something we want to keep in mind as we compare them to other companies in the semiconductor equipment industry.
Absolutely. Now let's talk about their economic moat. Essentially, this means their competitive advantage. What sets them apart? What protects their profits from the competition?
So what kind of moat does Axcelis have?
Analysts consider them to have a narrow moat. Their biggest strength is their leadership in silicon carbide ion implantation.
Now, silicon carbide is a really big deal in the electric vehicle market. It's used for all those high-voltage systems in EVs, particularly as more and more EVs move towards those 800-volt architectures, the ones that everyone's excited about for faster charging and longer range.
Right, so Axcelis is really dominating this particular niche within the EV space, which is one of the big reasons investors are interested in them. However, their moat isn't perfect. They do rely on some cyclical markets, like the power sector, and they also have a lot of exposure to China, which can be a bit of a volatile market.
So not a perfect moat, but definitely some potential there. What's the overall sentiment like right now? What are people saying about ACLS?
Generally, there's a pretty positive outlook, even though there are some potential challenges on the horizon. Commentary from earlier this month suggests that ACLS is a good opportunity. Despite those short-term challenges, their Q3 performance was decent, revenue met expectations, and they actually beat their EPS projections.
Okay, hold on a sec. You're saying things are positive, but there are challenges. What exactly are those challenges?
Well, the big one is an anticipated slowdown, mainly in the first half of 2025. It all comes down to what's called capacity digestion. Basically, there was a huge ramp-up of capacity, and now the market needs to absorb it, which could lead to weaker demand. This is especially true in China and in what they call the power and mature markets.
So kind of a correction after a period of really rapid growth.
Yeah.
And I'm guessing this also explains why we saw softer bookings in Q3.
Exactly. Bookings were definitely lower than expected, largely because of that capacity digestion in China. There was also a historical backlog correction, which might make some investors a little nervous, even though it doesn't actually affect their previously reported financials.
Okay, so we have a bit of a mixed bag here. Solid performance, but signs of a potential slowdown. What's an investor supposed to make of all this?
Well, it really comes down to weighing those short-term concerns against the potential for long-term growth. And we also need to consider what the analysts are saying. B. Riley, for example, recently maintained their buy rating on ACLS, even though they lowered their price target a little bit to $155.
So they're still bullish, just maybe not quite as bullish as they were before.
Right, and remember, the stock is currently trading around $87.77, which is significantly below their estimated fair value of $128.05. That suggests a potential upside that's hard to ignore.
Interesting. So definitely some things to consider on both the positive and the potentially negative side. What else should investors be thinking about when they evaluate ACLS?
Well, it's crucial to remember that the semiconductor industry is cyclical, prone to booms and busts. And those cycles are driven by things like global economic conditions, as well as technological advancements.
Right. A downturn in one area of the economy can ripple out and affect others.
Absolutely. So if we see a broader slowdown in the global economy, demand for chips could take a hit, and companies like Axcelis would feel the impact. And then there's the competitive landscape. ACLS isn't alone in this space. They're up against some really big players in the semiconductor equipment world, like Applied Materials and Lam Research.
Yeah, those are some tough competitors.
For sure. And we can't forget about the possibility of disruptive new technologies, like extreme ultraviolet lithography, or EUV for short. These advancements could really change the game in the industry.
Sounds like there's a lot to consider.
There is.
Yeah.
Investors need to factor in the economic cycle, the competitive landscape, and the potential for disruptive technologies. When they're evaluating a company like Axcelis, it's not just about the technology itself, but the broader context in which they operate.
So it's a complex picture, but understanding the complexity seems key. Let's circle back to those Q3 2024 earnings call insights for a moment. What were some of the key takeaways for you?
Well, we've already talked about how they met revenue expectations and exceeded the EPS outlook. But the main theme I noticed was this tension between their positive long-term prospects and the immediate concerns over capacity digestion, particularly in China.
So are those long-term prospects enough to outweigh those capacity issues?
Well, that's a good question. It's kind of a balancing act, trying to reconcile those two narratives. During the call, they emphasized a lot of long-term drivers that are creating optimism, like the growth of the silicon carbide market. Especially with the shift towards those 800-volt electric vehicles, there's definitely a lot of potential there.
But for now, at least, it sounds like that potential is being overshadowed a bit by this whole capacity digestion thing.
Yeah, that's right. And the backlog correction we mentioned earlier also came up during the call.
Can you remind us what that was about again?
Sure. Basically, it was a change in how they calculate their backlog, which resulted in a decrease in their previously reported backlog numbers. Axcelis was very transparent about the change, though, and they emphasized that it didn't affect any of their other reported financial data. It was mostly a technical change in how they were handling prepayments.
Okay, so even though it's a technicality, it's still something that investors are likely watching closely.
For sure. They also talked about their supply chain management and their focus on localizing their supply chain to mitigate risks and keep costs down. And they reaffirmed their commitment to their share repurchase program, which still had $145 million remaining at the end of Q3.
That buyback program always seems to get investors' attention.
Yeah, it's often seen as a sign that a company believes its stock is undervalued. And it can be a good way to reward shareholders. So, we have this mix of short-term challenges and long-term opportunities.
And understanding both seems crucial for making a good investment decision.
It definitely is. And to do that, we need to dig a little deeper into their financials and really see what they reveal.
Let's do it. Okay, so we've got the big picture for Axcelis Technologies.
Yeah.
Now let's really dive into those financials and see what they tell us.
Sounds good. Let's revisit those key numbers we touched on earlier. ACLS has a market cap of $2.34 billion, and revenue over the past 12 months has been $1.08 billion.
Right, and their net income came in at $222.09 million. Those are some pretty solid numbers. But I'm curious, where exactly is all that revenue coming from? What's the breakdown by segment?
Well, if we look at their second quarter 2024 results, their system segment generated a huge portion of their revenue. We're talking $473.23 million.
Wow, that's a significant chunk. Just remind me, what exactly falls under systems?
Oh, right. That's their core business, the ion implantation systems that are used in semiconductor chip fabrication. They design, manufacture, and service those crucial pieces of equipment. Their second largest segment is their aftermarket business, which brought in $129.38 million in that same quarter.
So that's all the services and support they offer to keep those systems running smoothly.
Yep, exactly. Things like spare parts, upgrades, maintenance services, even customer training. It's all about maximizing the lifespan and performance of those expensive ion implanters.
Makes sense. So it's not just about selling the equipment. It's about building those long-term relationships with their customers.
For sure. It's a really smart strategy, especially in a high-tech industry like this, where, ongoing support and innovation are so important. Now, in terms of geography, their biggest market is the Asia-Pacific region. They generated $202.38 million from that region in Q2 of 2024.
We've talked about their exposure to China, but this suggests they're not entirely reliant on that one market.
No, definitely not. They have a pretty diverse presence across the whole Asia-Pacific region, and they also operate in Europe and North America, which brought in $21.24 million and $32.95 million, respectively, in that same quarter.
So that global diversification is probably helping them balance out some of that regional risk we were discussing earlier.
Yeah, I think so. Having operations in different regions allows them to tap into multiple growth markets and reduces their dependence on any single economy. Now let's move on to some of the those ratios and metrics that investors use to evaluate a company's financial health.
Yeah, those numbers can be really helpful in getting a clearer picture of how a company is actually performing.
Exactly. So let's start with that PE ratio, the one we mentioned earlier, 17.25. To really understand if that's a good number or not, we need to compare it to some of ACLS's peers.
Right, so other players in the semiconductor equipment industry.
Exactly. And it turns out that ACLS's PE ratio is actually quite favorable compared to some of the bigger names in the industry. Applied Materials, for example, has a PE ratio around 19, and Lam Research is closer to 18.
Interesting. So does that suggest that ACLS might be undervalued relative to its peers?
Potentially. It's definitely something to consider, but we shouldn't rely on just one metric. Their price-to-sales ratio, or PS ratio, is also worth looking at. At 3.76, it's lower than both Applied Materials, which is around 5, and Lam Research, which is closer to 4.
So both the PE and PS ratios kind of hint that ACLS might be trading at a discount compared to those larger competitors. What other financial signals are we seeing?
Well, their return on equity, or ROE, is another key metric. It currently stands at 21.87%.
Wow, it's pretty impressive. It means they're using their shareholders' investments effectively
Yeah.
to generate profits.
Exactly. And their ROE has actually been trending upwards in recent years,
Well,
which is a positive sign. It shows improving profitability. Of course, we can't overlook their debt situation. A company's debt load can really impact its financial flexibility and, its overall risk profile.
right, too much debt can be a red flag for investors. So how much debt is ACLS carrying?
Well, they actually have a very manageable debt load. Their debt-to-equity ratio is currently a very low 0.29.
Wow, that is low. So that indicates they're not overly reliant on borrowed money,
Yeah,
which is definitely a good sign of financial strength.
for sure. It gives them more flexibility to invest in growth and to navigate, any potential economic downturns, and even to return value to shareholders through things like buybacks.
Okay, so we're looking at solid revenue, attractive valuations compared to their competitors, strong profitability, and a manageable debt load. It all seems to paint a pretty healthy financial picture.
It does. However, it's important to remember that every company faces challenges. And as we discussed, ACLS is currently dealing with this period of capacity digestion. Especially in China, this is likely to impact their performance in the short term, and it's something investors need to weigh carefully.
Right. It's always a balancing act, evaluating both the potential risks and the potential rewards. But understanding these financials definitely provides some valuable context.
Absolutely. It's all about making informed decisions based on a solid understanding of the company's financial health. Now, to really get a comprehensive view, we need to look at the bigger picture, starting with those long-term drivers impacting ACLS and the semiconductor industry as a whole. Okay, so we've covered those financials for Axcelis, but to really get the full picture, we need to think about those longer-term factors that are at play here. It's not just about where a company is today, it's about where it's headed in the future.
That's a really good point. So what are some of those long-term drivers impacting ACLS and the semiconductor industry as a whole?
Well, there's a lot of talk about the potential risks tied to ACLS's reliance on the silicon carbide market. And while it's true that they're a leader in that niche, and the whole EV boom is definitely driving growth, some analysts are saying that it's still a relatively small segment of the overall market.
So the concern is that they're too focused on one particular area.
Exactly. The semiconductor industry is incredibly competitive. There are always new technologies popping up. What if silicon carbide doesn't become as widely adopted in EV power systems, as some people are predicting? What if a new technology comes along and disrupts the market? These are the kinds of questions that investors need to be asking themselves.
Yeah, those are definitely valid concerns. It always comes back to balancing those potential rewards with the potential risks.
Right. And another thing to keep in mind is the cyclical nature of the semiconductor industry. We've talked about how it's prone to these booms and busts, driven by those global economic conditions and, those technological advancements.
And I imagine figuring out where we are in that cycle is really important. Is this slowdown we're seeing just a temporary blip? Or is it the start of something more serious?
That's the million-dollar question. Some analysts think that this capacity digestion we're seeing is actually a sign of a broader slowdown in the semiconductor industry. And if that's the case, it could have some serious implications for ACLS. even with their strong position in that silicon carbide market.
So it's not just about how one company is performing. It's about understanding the health of the entire industry.
Exactly. And we can't ignore those bigger economic concerns either, like inflation, rising interest rates, geopolitical instability. All of those factors can put a damper on global growth, and that can definitely impact demand for semiconductors.
So we're talking about a whole web of interconnected factors here.
We are. And on top of all that, we have to consider the competitive landscape. We've talked about the big players like Applied Materials and Lam Research, but there are always smaller, more nimble competitors emerging.
Yeah, it must be tough to keep up with all the new players.
It is, and some analysts are worried that ACLS might struggle. To maintain its market leadership in the face of all this competition, they might have to ramp up their research and development spending, which could eat into their profitability.
So it's not just about where they stand today, it's about their ability to adapt and innovate, to stay ahead of the curve in such a fast-paced industry.
Right, and that brings us back to that whole economic moat thing. Is it strong enough to withstand all these competitive pressures? Investors really need to take a hard look at that moat and assess its long-term sustainability.
So we've looked at the potential upsides and downsides, and we've heard a variety of perspectives on ACLS's future. It seems like there's no easy answer when it comes to investing in this company.
Yeah, there isn't. It really comes down to individual risk tolerance, your investment goals, and your level of confidence in their long-term prospects.
Investing is all about doing your research, weighing the evidence, and making those informed decisions based on your own individual circumstances.
Exactly. And hopefully this deep dive has given you the insights you need to make those decisions with confidence.
I think so. Our goal here at the Deep Dive is to give you the knowledge you need to make smart investment choices. So if you found this analysis helpful, please consider subscribing to our YouTube channel and hitting that bell icon so you don't miss out on any future deep dives into the world of finance and investing.
We're here to help you navigate the complexities of the market, one deep dive at a time.